Yeah, so let's just follow up from yesterday. I mean, not from yesterday, from Wednesday's price action. Okay, so remember what we talked about. We were speaking on, where is this? All right, pretty much here being our catalyst to either continue the bias or to give us a reversal. So we, like I said, right, I believe price was like right here, right when we did the call. So I said whatever happens here is pretty much going to dictate what happens, right? So we could have anticipated something like this here, right? But it needs a catalyst in order to do that. So I think we're good on this time frame. No, we'll go to 5 minute. Cool. So as we can clearly see here, right, that POI maintained itself. All right, broke structure. All right, point of invalidation is now here. That was never broken, but we did leave equal lows. Okay, so equal lows, even though this is here, that does not mean sell here, here, here. You need bearish order flow to be in play in order to play this, right? So what happens, right? The point of invalidation is held even though we have equal lows, and we create not only a new high, but we also break this previous range, right? Meaning that we create bullish structure. Okay, so if you're looking at that on a different time frame, right, this bullish order flow dictated a bullish move, which took out a very important piece of structure here, right? So even though, right, we came back to mitigate that wick here, even though we came to mitigate that, we broke structure. So even though this was the catalyst that created the bearish order flow, right, which pretty much here incites selling movement, right, which makes sense, a type of trap, even though our structure has now shifted bullish, right, which means we came back into this candle here, right? Unfortunately, I didn't get the candle that I wanted, and this was beyond trading hours, so it was like not too favorable in my eyes, right? I would have wanted, I believe I was looking at a candle. Yeah, I was looking at this candle here, right? This candle. But, sorry about that. But we ended up coming back into here. Right, pretty much there. So like I said, it's too messy for me. Like I would have preferably seen this entire candle right as the potential point of interest, but right, because I don't want to be bullish on this in the long run, right, it's pretty confusing, right? But it makes sense because the catalyst, right, was the bullish order flow here and here, which created the structure break. All we did was come back into a discount, right, before continuing higher, right? So now we have broken through extremely key levels of structure, right? This final leg here has not been taken out, and now even this entire leg has now been broken, right? So that signifies that we should see pretty decent bullish movement. Sorry about that. So since DXY, typically the way that I've seen this move is it likes to touch structure points, previous structure points, right? And we've seen that multiple times, right? Which is primarily here, right? So if we actually see something like this again, you now have potential projections of not essentially counter trend trades, but of when to try to look for a reversal. So I believe there's something on the daily 3-day. Right, cool. So this structure point here, right, lines up with a daily inefficiency there, right? Just like here, I believe it was like a 50% around here. I don't recall. No, it wasn't. It didn't hit that. But we can see the same thing. So now the only issues here is that this is gaining speed, right? If this is gaining speed, it's gaining momentum, which means order flow is in the direction that it's going, right? So it would take, right, probably some type of time before we actually see a catalyst that inclines us to move lower, right? But if we do react somewhere here, right, we're not looking at taking this out, we're looking at taking this out. Why? Because naturally, if we're already seeing inside of this swing leg, we're already seeing minor intraday moves starting to shift and give us a probable bearish scenario, right? Then this will not only be taken out, this will be taken out, right? And then that's when it gets weird, because depending on the reaction that we get at a previous major low like this, right? This is like previous decade low, maybe. No, previous 5-year low ish, right? Which is here, right? So because so much liquidity is going to be cleared due to how long this is taken to essentially structure itself, right? It could easily wick, and then now we get a full-on retracement, right? A very extremely deep retracement, and then we see more bearish movement, right? But it all depends on what happens here, how we react here, okay? So that goes to EURUSD. This actually came into, I believe, a weekly wick. Yeah, came into the weekly wick here. I know we've mentioned this like a couple weeks back, and as you can see, that's where we're starting to react from. But it's pretty hard to make decisions just based off of that because of how bullish we are. And even if we see initial breaks of structure, then it's so hard to judge any type of pullback like that. So even though the scenario was given break of structure, came back into a premium, and then you sell lower, right? So even though that happened, right, it's extremely hard to play because you're essentially guessing a high. Why? Because even though this is a break of structure here, this is not a full-on break of structure here, because this is the leg that took out a ton of liquidity here, right? So this, right, is high risk, right, low probability, even though it worked out, right? Just talking about how it would be on paper. Why? Because you only have an initial break of structure, not even a medium term or even a bigger term, right? Which is why I'm always stressing continuations over reversals, right? So I hope that makes sense, right? Because immediately after that structure break, we now have, I believe, a more true structure break because we were given unwillingness there, right? Unwillingness here, structure break, right? Even now, a new medium-term range here, liquidity was taken, right? Created a new leg down, right? Gave, I believe this is equilibrium, right? We'll check that in a bit. Right, created a new leg, another pullback. I don't think this is equilibrium, and then we gave more bearish move down. So it's super tricky because we're not really getting deep retracements, and I think it's it could possibly be because this is not a full trend trade. Typically, like I said, unstructured moves like to do that. Don't take my word for it. Actually look into that, because in theory that makes sense to me, right? Structured moves make sense because order flow, structure, and catalysts all favor that direction, whereas counter trend moves are a lot more choppy and even potentially corrective, right? So that's just what I'm making sense out of the situation. So I think if you go to the 3-day, right, we have the exact same scenario here, right, where we could easily see any type of structure test, right? But it's super hard to try to make this, this assumption, because we can very well see, right, an overextended move, right, pretty much inclining bullish bias, could take liquidity on a longer scale and then actually give a raw pullback, and we can now actually touch legitimate, well, pretty much this previous high here, right? Because I believe there is an efficiency somewhere there that it never came back to recover. Yeah, you see here, right? So if we were to touch a previous structure point, it also makes sense because there is still inefficient pricing left there, right? So this could easily start to pretty much grab liquidity on multiple ends, right, before we actually see the full move higher, right? Although these aren't equal lows, there is liquidity sitting under this low. So if we were to break not only that, but if we break here, because this is the final move, continuation move up before even the corrective structure, right? If we break these two, right, then I'm now aiming for these lows and potentially inefficient pricing here, right? But if we go even beyond this, right, start challenging these lows, then the entire bias, in my opinion, does not make sense anymore. I would like to see this, if it is tapped, to just be quick, right? Give me those H4, immediate H4 structure breaks, right? Then we continue trend there, right? So that could very well happen. And the only reason why I'm making that assumption is because of this, right? So it's not the exact same situation, right? But we see corrective movement, right? Liquidity grab to the upside. Well, this broke structure, but the other one didn't break structure, right? But immediately from here, we then came back for the liquidity, came back for the discount to then move higher. So you could easily see the exact same scenario on a bigger scale here, right? But of course, all of this is all speculation. It won't make sense unless it actually happens, right? So we're running POI number 1, inefficient pricing, and then there's POI number 2, structure point number 2, right? We could easily see the corrective movement, right? The inducement of bullish buyers, take those bullish buyers out, give the real move higher, right? It makes sense because this could also here be any type of premium or even equilibrium here, right? Overall equilibrium, right? It makes sense, right? And even if this happens here, you could even see that as a potential structure break. So even if you're in longs from a reaction here, you could just look for a hedge position, right? Trap price, and whichever way it goes, you win. So it's playing a game of probabilities and seeing essentially where price can go from here. But that's that. This one too made a lot of sense, right? Remember we discussed, where was it? We were here, right? Remember we discussed this, right? We were here, right? That I told you that I was looking at this entire immediate leg, right? We broke structure here, right? This is the full leg that took that out. Okay, so remember what we said, we can easily take out this initial high to induce buyers, right? But this is the overall point of invalidation. Okay, so as you can see, we induced buyers, gave corrective structure, right? Then this failed, mitigated somewhere here, right? Took liquidity here, right? Now gave a new structure range here, right? And all we did was pull back here. Okay, so let me clean that up for you. Right, from there, you can even use this entire range here, right, or even instead of using here, you could go here, right? But this could even be seen as a liquidity grab. But no matter how you look at it, right, each and every point of structure is bearish, okay? So if you want to play this immediate range, or if you want to even play this entire range here, right, the reason why I'm considering this as a very important structure point, right, and not only this, is because this is the high that created two major structure breaks here. So I know that if we break up here, right, it won't make sense for this to continue lower without another catalyst, which would be, you know, obviously we need bullish movement to break these highs. We then need to see some type of catalyst, right, whether it's a structure break, a distribution, any type of rejection wick. Right, so as I'm saying here, the final immediate range could be easily there, and all we did was come back to fill inefficiency there. Right, so even though we did get this reaction, right, the overall is still bearish, but these mini ranges are actually starting to look bullish. Right, so now it's a matter of, do we break lows or do we break highs? Right, that could easily be equal highs. It looks more like a liquidity grab, but this could be a continuation of structure, right, where we get a bearish move down, pull back, continuation. Right, that just makes the most sense to me, because on our daily chart, right, remember, this is what we are pursuing, right? So much liquidity down here. So it's interesting, right? We could easily see liquidity be cleared, come back, touch structure, and continue lower. But it's, you know, it's too early to call that at this point. But yeah, other than that, I don't really have much else. GU, very nice schem too that a lot of people played out. Right, a lot of people were playing this schem 2 inside of our session, right, which is completely valid. Right, why? You could see this as corrective structure. We now have a bullish incentive. We have our point of invalidation, right? We came back into a discount. We gave a schem 2 on M1, right, which then led to take out liquidity, right? Extremely high liquidity here. And immediately from there, broke in a minor intraday structure here, right? New point of validation there, right? And then this is where the bearish order flow just came into play, right? Which then caused the release of price to come lower. Right, so this is interesting, right? Because I'm not gonna try to play this range. I'm not gonna try to play this. It doesn't make sense. Why? Because you have the catalyst going against that, which is here. So not only that, but once you zoom out, you see that you're extremely high in price. So I'm not saying this is gonna fall, but I need a bullish catalyst to incline me to want to buy this again and to take this higher, right? So whether it's deeper pricing, sorry about that, whether it's deeper pricing, any type of minor intraday breaks of structure here that pretty much disturb the bearish flow and start to incline any type of bullish flow. So you know, you need a catalyst there, but this could very well crash because of the catalyst here, which is even on the daily chart, right? Daily chart liquidity grab there. Even the weekly chart was pretty, you know, iffy. But yeah, other than that, I don't really have much to cover. I've been crammed with school, so I'm aiming to finish the course by the end of the month. That's like my goal. And then from there, just fully focus on school, fully focus on one-on-ones, and then fully focus on my trading. Yeah, other than that, do you guys have any questions? you talking about? That's not a question you asked me, you know that? Because I cannot tell you that. I cannot tell you that's what's going to happen. Why? I don't have enough information to give you that. Okay, the switch energy did good for me. Yeah, but other than that, do you guys have any questions? Any questions, concerns, anything? Like, at least say no, so I know. Nope, cool. I mean, it's obviously, right now, like, you're just in rinse and repeat, you know? All this is rinse and repeat. Someone is talking, bro. Hold on. I don't know why I'm not connected to my speaker. 1 second. Okay. Now I can hear you. My bad about that.
Yeah. So I'm pretty sure I already know the answer to this question, but I just wanted to double check. You know the three laws of Wyckoff? So I can use those concepts even when I'm not in a schematic, right?
You said what?
You know the three laws of Wyckoff? I'm just double checking, but I can use those concepts even when I'm not trading inside a schematic, right?
Why not?
Yeah, that's like, I just want, you know, I think that's right. I was just double
Yeah, but why not? Why wouldn't you be able to?
Yeah, I don't see a reason.
Yeah, see, exactly. Right, because law of cause and effect, right? Cause and effect, I say catalyst a lot. That would be your cause, and your effect would be the follow through. Like we said with the range on DXY. Right, this is just my way of applying it, right? But we said this POI here, right, could either be the catalyst to give us higher movement, or it could cause us to come lower movement. So what was the catalyst? Right, this bullish order flow, right, that broke structure, and the effect was a change of overall direction.
So would you say that those laws are like the core principle behind your trading?
Yes and no. Yes and no.
Would you say like the structure and then those?
No, it's intuition. If it doesn't make sense, it doesn't make sense.
Yeah.
But yeah, I do use the laws a lot though, especially effort, cause and effect, supply and demand. Kind of iffy on that one, and that's just because we're dealing with currency, and like when you're dealing with currency, right? I would only focus on that cycle, the supply and demand cycle, on a just overall scheme.
And would you
You see, like hold on 1 second, right? So you can easily see in the long run, you know, this is where that image from the Wyckoff website kind of looks like. You see, and how we react from equilibrium.
Yeah.
So that one I really don't use a lot, because in an overall scale, this is how currency moves, right? As one devalues, one ascends in value, etc., and vice versa.
Yeah. Yeah, because like one thing like, because obviously Wyckoff is like kind of new to me as well, because I've been trading like without it, just like smart money, but without Wyckoff. But like I feel like sometimes I may be like forcing seeing Wyckoff. So like, I don't know, when you're looking at a chart, are you kind of always trying to see if it is a schematic, or you kind of like just let it happen and not?
What makes a schematic valid for one?
Once it's finished, right?
Exactly. So how can you assume?
So it would be a mistake if I'm like trying to anticipate that it's a shakeout, or it's a, you know.
Well, you got to go based off
then
the effort, right? Do you even know what effort is?
yeah, like momentum, right?
No, effort. Effort is based on volume, right? But I correlate it with structure and order flow. Pretty much combo with the three. That's how you judge volume, and that's why you want to see, the high volume in the climactic part of the schematic. That's the only way I can assume a schematic might occur. But I don't really wait for the schematic to occur. I just wait for structure to tell me something, right? Because inside schematics, you do see optimism.
I have a question. How actually is the volume calculated? Like, because you know how
No,
like
I don't.
indicators.
I honestly have no clue. No clue.
You know how like RSI and all this stuff is like usually like retail stuff. Like, how do I don't know, like.
It's usually based on previous candles. Volume, I don't know what provider is used, but you can probably look that up. Right here. So it says what it is, right? But it doesn't say who its provider is. So, right. So it technically, right? A lot of people say it is. The values are incorrect, right? But we don't really care for values. We care for proportion. Right. So that's pretty much what I say with the volume.
Yeah, I mean, as long as it makes sense, like when you're trading, doesn't really matter what actually is happening.
Yeah, that's true. But yeah, no, I have no clue with that. Honestly, it doesn't matter to me. But, yep.
Yeah, it's just like there's just times where like I'll see like price breaks out of a range, and then it does like the classic like double top, does like a like what's it called? Like does the shakeout of a reaccumulation.
Where? Show me an example.
Like on DXY 5 minute, would you consider that a reaccumulation? Like
what are you talking about?
Like like that spike being a shakeout.
Here?
Yeah.
In terms of principle, yeah. In terms of schematic, no. Because this doesn't look like a schematic for one, but it does follow the Wyckoff principles.
So I could base it even if it doesn't look like one, just following principles.
Yeah, then you just play based off of the catalysts.
Okay.
So you gotta know what you're playing off of first. What do you play off of?
Inefficiency maybe?
No, like in general, what do you play off of?
Like what my strategy is?
Yeah, like how do you make plays?
Well, that's what I'm trying to figure out because usually, like before, it was kind of wait for a breakout and then just follow the trade the pullback.
But that could also be misleading.
Yeah, but I feel like a lot of times, like I'm waiting too deep for a pullback, or once my pullback comes and then it's like so deep that it's already a change in momentum and price just drops.
So the goal is to just essentially catch your continuations, right? But interpreting ranges, I think, is key. Right, but that's something you have to figure out. That's not something I can show you.
Yeah. Yeah, you already answered my question. It was just about the laws because like I'm just trying to.
But you do follow the principles, though.
Yeah.
You have to.
Yeah. Because before I was very focused on just structure, but I wasn't really focused on like the reasoning and the logic behind it. I was just kind of following like a higher high is made that automatically means that price is going to go up.
I just think that's the issue with that is it's too linear.
Yeah, it's like too
it's too linear. You're analyzing a what, you're not analyzing a why.
Yeah.
So that's why it kind of won't make sense at a time.
Yeah. I feel like if I start to really like implement the principles and the logic, that'll help me because I feel like sometimes I'm reading structure kind of on a retail way of seeing it? Not like support and resistance.
There
but
is
just like
no
seeing.
institutional way of looking at structure. There is no retail way of looking at structure. It's just market structure. It's just
Yeah,
subjective
it's
to
just
your eyes, your
how.
rules, shit, even your mood.
Yeah.
Yeah, like I don't know.
Is it
I
like?
don't like that talk about, institutional this, institutional that, right?
Yeah.
Just because it doesn't make sense to me. Like, I think it's stupid. Trade like
Yeah.
the banks, trade with the banks. That doesn't make sense when you really think about it, right? Institutional this, institutional that doesn't make sense. We're all retail
And
at the
you
end
know,
of the day.
I think you guys talked about this a while back, but you know how like back in the day, like maybe like 100 years ago or something, like all these guys were just making bank from trading, but like they didn't even have charts,
Mm-hmm.
or like they had to draw them out or something. Like
Mm-hmm.
I don't know, how is that even?
Knowing price,
Yeah, and you said that. I remember you
history of
said that
price.
price. That means price is the key, right?
Yeah, history of price, and then understanding the whys to make projections. And those projections, if they make sense, they usually come through.
Mm.
Oh, they did. They still had open, low, high, close. Okay, see, so they could have probably written down a lot of their chart work. But it just depends
Mm.
because you can draw the chart in so many ways. You see, so you have to just
Yeah,
find what
yeah,
makes sense to you, what you've practiced. Like for
yeah.
example, point and figure.
Practice by DeBaby now playing.
What the hell? Damn Siri.
Tweaking.
Yeah, Siri's tweaking. Right, like I don't use point and figure chart, even though it's technically a source of measurement for Wyckoff, people that trade Wyckoff. Essentially, by counting, you make projections, which inclines to the whole geometric approach of trading,
Mm.
and the whole Fibonacci extension side of trading. That's what that eventually evolved into. But the reason why I don't use point and figure is because I'm so reliant on candle structure, with SCs, with inefficiencies. I'm so reliant on that to tell me what, whether it's bullish order flow, bearish order flow, whether it's bullish structure, bearish structure, right? And then correlating the two to make a reasonable
It's
decision.
kind of like understanding the rhythm of price.
Yeah,
Right?
their flow.
Yeah.
So
Yeah, I just find myself getting induced too much by certain moves that don't really matter. You know what I mean? Like I'm falling in traps.
Mm-hmm. Yep, I see that.
Yeah, I guess just gotta keep studying.
Of course, looked like tic-tac-toe for me. Same. Point and figure can definitely be very effective, though. Most definitely very effective. Right? I go based off candles, not based off quantitative projections. Whether it's 100% of a move, right? Even though I do show you measured moves, right? I don't really focus on that. I focus more on targets being liquidity. Right? And is Faz on the call? No, he's not. No, he said something about like if you can't find the liquidity, you're probably the liquidity, and that made a lot of sense.
That's kind of true.
But yeah, it's interesting. At the end of the day, it's just about knowing what you need to know, not necessarily knowing everything.
Mm.
But yeah, essentially,
Would
my
you say-
conclusion to what you said about if you don't have candles, how could you have made money? Just understanding the why.
Must have been pretty hard doing that. To be honest. Like you have to be
Who
focusing on
knows?
it back in the day.
Who knows? I mean, understand economics, understand finance.
Yeah. Would you say price has like cycles?
Huh?
Would you say price has cycles?
Yeah, I mean, that's why you see up and down, because currency revolves around balance. Right? One devalues, one ascends in value, and it's pretty much how it goes every way around.
Mm. Yeah.
Even here, when I can see this coming down.
Oh yeah, I have another question. You know how you hear a lot like don't predict, react.
No, you react. You don't predict.
Yeah, that's what I meant. Sorry. Yeah, react, don't predict. Like, I kind of sometimes get sometimes kind of like you know, like I'll see it play and I'm like predicting like if price comes to this level then it'll do this. But is that predicting or is that reacting?
No, you're just making an assumption.
So that isn't predicting.
So there's like I think there's a difference with predicting and making assumptions. Predicting means you're making a play based off using information that's not shown in the chart. That's what I would say that is. Whereas the other one would be, you know, to create a if this then that scenario. So it's kind of the same thing. It's just kind of how you word it.
Okay.
But yeah. Does anybody else have any questions? Short and sweet. You're fine, bro. Bryce, are you one of my new guys? Yeah, go for it. Are you one of my new guys?
Hello?
Yes, sir.
Yeah, I'm new. I started yesterday.
Oh, yeah, okay, cool. I was like, I know I saw your notification on my phone.
Yeah, no, I really like your course. So I've been looking at a bit of smart money, kind of that aspect of trading, because I was a retail trader, so I'm pretty new to this. But
you were a what trader?
I was a retail trader.
And you're not a retail trader now?
No, not anymore.
And why is that?
Because I wanted to increase my RR, which is why your.
But there's no logic to that. You're still a retail trader. What's the definition of a retail trader?
I was doing another course and I was aiming.
No, bro. I'm trying to prove a point to you.
Yeah. I know what you mean, but my question is.
No, wait. I'm legitimately trying to make a point to you, right? Because this essentially builds on your psyche over time. So what does that on the screen say?
Individual trades of money from personal wealth.
All right, so
what
retail traders?
So what is a retail trader?
Anyone that trades with their personal wealth.
Exactly. So it's not subjective to how you trade, what you trade, when you trade, how you trade, etc. Right?
Yeah.
So I think
I
yeah. But I'm just correcting you because it'll help your psyche over time.
Yeah. So my question is, you talk about volume and how it correlates with price and how you can pick things away from that. When you're talking about sponsored candles, is it really important for you for volume to actually not be supporting that candle?
No, it depends. It depends on the scenario.
It depends on the scenario.
Yeah, it's always depending on the scenario. It's never absolute, right? Concepts are always relative. Principles are absolute. So you follow the principles based on, you know, whatever you see through the concepts.
Yeah. All right. So even if you saw your sponsored candle and it was in a valid setup, and you saw, say it was a bullish push up, solid candle, and you've got a push away, even if there was a lot of bullish volume in that candle, it doesn't bother you if it fits the scenario.
No, because I'm focusing on proportions, not quantity. Right,
Okay.
the proportions are what causes the instability, the quote-unquote divergence, and that is what gives you your reaction. And whether or not your direction is correct is whether or not you get a follow-through.
All right, that makes sense. All right, that's it.
That's cool. Got anybody else?
Cheers.
Awesome. Okay, guys, any more questions? I have to go in like 5 to 10 minutes. Assumptions is based on beliefs and principles, and predicting is foretelling. Yes. That's actually the perfect way to put it. I'm gonna put that on the screen. That makes a lot of sense. Yeah, he worded that better than I did. But yeah, hopefully I can finish that course soon because I want to get back to trading. Alright, I've just been super busy with school. Alright, so this is pretty much your lesson of the day. not necessarily market doesn't care about foretell. You just don't have enough information, data on an overall scale to make that kind of assumption, you know? That's more so how I look at it. But yeah, other than that, guys, I have to go drop off some food at my aunt's house because she got COVID. So I'll see you guys later on Wednesday. Wait, hopefully I don't have to switch up the timing. I might have to change the timing, and I might make how do I say it? I might make like a poll on whether or not you guys want something like on Tuesdays or on Thursdays. Maybe Tuesday will be better because if we do Thursdays and Saturdays might cover the exact same thing because you only have a day and a half of data left in the week. So we might move it to Tuesdays. It really just depends on how my schedule is. I need to see how my classes are going to be, and then pretty much go from there and then finish the course. And then that's when I can get organized with school, with one-on-ones and all that. But yeah, just be patient with me and I'll keep updating you guys as I see fit. Cool. All right, guys.